We all know that the inflation in US reached a 40-year high last month with prices up 8% from a year ago. It looks like in California, a gallon of gas is about $7. Despite the war, Fed decided to raise the rates more aggressively this year. And we spoke about boomflation and stagflation in the previous video. So now the big question is, how do we invest to outrun inflation? There are a couple options that I'm pretty sure most people are trying. Number one is real estate. People invest in real estate because of the value appreciation and because of the monthly rent collection. The advantage with investing in real estate is that you're able to generate constant income via rents on a monthly basis. At the same time, the disadvantage is that it could be very difficult to sell when you need the money because it's so illiquid. Another option is stocks. Historically, being invested in equities or stocks is really the only good way to stay ahead of inflation. Again, I'm referring to investing in stock market for long term, not for short term. You need to make sure that you don't need this money in the next 3 to 5 years because the market could do whatever in the short run, just like rents in the real estate. If you invest in the appropriate stocks, you would be getting dividends on a monthly or a quarterly basis, depending on the company you have invested in. What is a dividend? It's a sum of money that's paid regularly, typically quarterly, by a company to its shareholders out of its profits or reserves. Option 3 could be gold. With stock market, the way it's performing, gold is a hedge that people are using against inflation. Investing in gold is a pretty good idea. However, you're not going to get any monthly income out of it. It's just that the value would appreciate. So investing in gold is good. However, investing all of your money in gold may not be a good idea. Going back to the stock market discussion. So remember I said that it's for the long-term growth. So invest in companies that you think you're gonna hold your money in the long term, right? If you do not understand a specific company's business model, investing in a S&P 500 index fund is a good idea, right? People make mistakes, and I've made mistakes in the past. I've invested in Zoom in the peak pandemic time frame, and now Zoom is down, right? To err is human because people have invested in pandemic popular stocks like Zoom, Palantir, and all that, and now they're all down, right? So make sure that you understand the business model, and that's gonna help you in the long run. Let's say you invest $1,000 into the Vanguard S&P 500 index fund. The way it works is that the $1,000 will be invested in companies like Apple, Microsoft, Google, Amazon, Tesla, Nvidia, Berkshire, Facebook, United Health Group, Johnson & Johnson, and many other companies of the index. So we spoke about what we can do to outrun inflation, right? So let's also talk about what we should not be doing in this inflationary environment. So there are two kinds of households, right? There is a rich household and wealthy household. Rich household is where the annual income is pretty high. At the same time, the income goes into creating liabilities as opposed to the assets, right? What are the liabilities? Like multiple cars at home and boats, trucks, and they probably have a higher home mortgage because they have a huge house, and they probably have an RV, and they probably have got stuff that they have to pay for each month. Whereas the wealthy household is where the income is high and the earned income goes into assets. What are the assets? Real estates, stocks, equities, gold, etc. So, in the wealthy household, the dividends that get generated from equities get reinvested back into the stock market, and the rental income that is received from the real estate is probably used for another investments. So all the income, the earned income as well as the passive income, both get reinvested back into the assets. It's kind of a snowball effect, which will multiply the, the income of the household.